Welcome back to another episode of Wealth Within Reach. And this is an amazing episode for you guys today. So, this episode is for the person who is in a situation where you guys are just paying a lot of money in taxes and you are just wondering, why am I paying so much in taxes? There has to be a better way. I hear that real estate investing helps people save money in taxes. How does that work? Or maybe you are already an investor, you're already a property owner, and you're like, okay, they say it's supposed to help me save money, but I'm not really seeing the savings. If that is you, then this episode is absolutely for you. I talk to so many people, and they are in a situation where they are just paying the taxes and they just think that they don't have any other options and that's it. And that's not true. And so I want to help you get some clarity and understand some new strategies that's going to help you. All right. And while we're speaking of new strategies, really quickly, if you have not already joined my free class, The Biggest Roadblocks That Landlords Face and How to Fix Them, what are you doing? All right. A big part of this class is going to help you learn the systems and the processes to get your time back so that you can even focus on things like your tax strategy. And so I want you to go to the link below and join that class. But without further ado, I'm super excited about today's guest because if you related to any of those situations that I mentioned above, you're in for a treat. If you've been to the Owning and Living It experience, you have seen her, you've heard her. She is phenomenal. She probably blew your mind. I'm actually kind of fangirling because one of the first books I read about taxes was her book. She's also a best-selling author and she is managing director of Keystone CPA, one of the top CPA firms for real estate investors in the US. Welcome, Amanda Hahn.
Thank you
Welcome.
so much for having me. So excited to be here. I love that you just do so much to bring education. And being at your event was super amazing because that was the year when you gave away a house.
Yes, a
And I've
full house.
never been to an event where that happened. So it
I
was
know,
super cool
right?
to see.
Oh man, people keep asking me, "Are you gonna do that again?" I'm like, "No, you just had to be there the first time, okay? You just had to be there. This is why you should never miss another owning and living experience because you never know what's gonna happen, okay? It may not give
Yes,
away a
yes.
house, but I do a lot of amazing, unique things. I love it. Well, I'm so happy for you to be here. I mean, you're just a wealth of knowledge, and this is one of those topics where so many people just think that they have to pay the money and that there's no other options, right? And so, as you are meeting with different people and clients, and what are some of the biggest misconceptions around taxes that most people have?
Well, I think you kind of hit it on the dot, which is that most people tend to think taxes is just something that happens to me. And it happens to me every year and I don't like it, but there's really nothing I can do about it. And I think a lot of that just comes from maybe even the way we were brought up, right? We see our parents pay taxes and they might moan and groan about it. They probably don't do much about it. I know for most people, their parents don't talk to them a lot about taxes and tax planning. And also the media too. I think media is a little bit at fault for that too, because the media really has a narrative about how tax breaks are only for the wealthy and the super wealthy. We hear about that all the time. We read about it. It's for large corporations and the Elon Musks of the world. And so, that narrative, and also I think our personal experience is kind of why most people just end up thinking, yeah, I got to pay taxes again. I don't like it, but there's nothing I can do about it. But I think what's really interesting to know that there's only one set of tax law and there's not like different tax rules. It's the same set of tax rules. So if we really look at it and really look at what is it that the wealthy are doing, because we know wealthy people pay less tax. What is it that they're doing? And are there aspects of that we can mimic or replicate for ourselves? We might not be saving, millions of taxes because we're not making billions of income. But if I'm someone who makes 300,000 of income and I could increase my tax savings by, let's say, 30,000, right? 10%,
Huge.
that's $30,000 more that I didn't have to work overtime for, or work on the weekends to earn that.
Yes. No, 1000%. A lot of the people who are listening to this podcast, they're interested in building wealth. So it's not just like financial literacy and budgeting. Like they've kind of already done that. They've got the degrees, they are leaders in their companies, they have done all the right things that they say to do to make the money. But no one has prepared, especially us as minorities, for how to handle taxes. And so for the people who are high income earners, when does tax planning need to be a thing for them? And what is the benefit of tax planning? And what is it?
Yeah. It's very interesting because why it's important, right? For people who are high income earners, people who are on, higher level in their companies, or maybe they have their own business or at their job. I think a lot of people feel like, I've done all the right things, right? I've worked hard, I've gotten to where I am, and now I make a lot of money. But every April, you feel like you're punished, right? Because I made so much money, now I got to pay so much in taxes. I got a promotion. Now I have to pay more taxes. It's kind of like the story of life. What's really interesting is last year, in 2025, the Journal of Economics came out with their research that showed for the average American who makes $350,000 a year over their lifetime, they lose about $5 million to taxes. How crazy is
Wow.
that? $5 million.
$5,000,000?
Yes,
Wow.
and that's a lot, right? And so somebody making 350 is a good amount, but it's not like $1 million a year. You would think that only happens when you're making millions. So it's really, really interesting for us to really take time to learn at least
Mhm.
the basics about tax planning and what are some of the things we can consider doing. Because like you said, our parents didn't teach us that. Our teachers didn't teach us that. So it's up to us individually to kind of carve out the time to learn it. Especially for high performers, I think we're all really good at like making sure we educate ourselves, educate like on investments and this and that. But we want to also allocate some time to understanding how to protect our money, not just earning it, but how do I keep all the money that I earned? And if we're talking to a group of people who are already of investment mindset, like I'm not here just to make the money, I want to have my money grow for me, then you're in the right place because the tax law is designed to incentivize people to invest. So these are the absolute best kind of people we want to talk to. If I talk to someone who say, I made a lot of money, I want to just buy all these things for myself, get myself a boat, and it's like, no, that's not what we're doing. We're trying to invest. Unless your boat is making money for you,
Yeah.
otherwise that's the wrong mindset to have. Right?
Yes.
But tax planning really happens all year round. It's not like April when you're trying to file last year's taxes. It happens before you change jobs. It happens before you buy your first or next rental property, before you sell your next investment or decide to get into the stock market or even getting married or moving or kids going to college. These are all really great opportunities for potential tax.
Yeah, because some of those things can create a taxable event. And so you guys will learn what that means at a later time. So I know later in our episode, you are going to actually give a real life example of how like you've actually been able to help your clients massively save money in taxes. So if you guys are listening or you're watching, you want to make sure you stay to the end because I feel like the example will really make it like bring it to life like how and why this is so beneficial, so be sure to stay to the end. But what I was gonna say, I think when I first fell in love with tax strategy, because I'm very much like not a CPA, an accountant, I'm not that person, but I read Rich Dad Poor Dad. And if you haven't read it, you should read it. And if you read it 10 years ago, you should read it again. I read Rich Dad Poor Dad, and he talked about the cash flow quadrant and about how, like, essentially employees, you take no risk. So you end up paying the highest amount of taxes versus the investors and the corporations. They take the risk by providing the jobs and the housing, and they pay the least amount of taxes. And that's exactly what you said. It's like understanding how the tax system works and who it incentivizes and doing those type of events to help you to take advantage of it. And what you said, tax planning helps to provide, a guide and a blueprint for what you already are doing, which is crazy. Like a lot of times people are already doing the things that you need to do, but it's not reflected on your taxes. Would you like to speak more to that?
Well, yes, and I think it's interesting because earlier you had said, "Hey, this is for you if you invest in real estate already, but you feel like you're not seeing the benefit of it, right?" And we unfortunately do come across a lot of people like that. So most people, when they come to us, it is because their local CPA or their personal CPA does not do tax planning. So they're like, "Hey, I really feel like I'm missing. I want someone to kind of help me with that." And so one of the first steps in tax planning is we review previous year's tax returns, right? Because I want to know, what did you do in the past? Do you actually have real estate? Do you have a business? How did you report those things? Um, And I don't know if you find this shocking, but over 40% of tax returns we review are not optimized for tax savings.
Wow,
And a big percentage of, yeah, 40%.
that's big.
And a big component of that is relating to real estate.
Hmm.
Like how are people claiming depreciation paper loss, for example? Are they capturing all of the expenses? I think everyone's good about writing off mortgage interest and property taxes, but what about when they went out to Atlanta to go to your event, right? The flight, the hotel, the food. And so it's really when we talk about tax savings and, just making sure you're doing the right thing as a taxpayer, as an investor, is taking a step back and saying, okay, do I understand what are all of the write offs that I can actually take advantage of? Or am I relying on my CPA or my accountant who's was probably not with me in Atlanta to magically somehow know that I spent all this money with respect to my investment or my business.
Yeah, no, that's huge. One of the things I love to do with my clients, particularly in my mastermind when I work with them, is to help expose them to, other opportunities of tax, tax savings opportunities. And I often hear a lot of pushback, like, well, my CPA says that, these are my only options, or, that they're writing off as much as they can. I'm not in their CPA, I'm not talking to their CPA directly most times, but what I found that is that there are a lot of overlooked tax strategies that, just your ordinary CPA doesn't know about. And I know you love to talk about one of my favorite ones. What would you say are the most overlooked tax strategies that, high income earners who are already on property overlook and don't even take advantage of?
Yeah, I would say, when I talked about how over 40% of returns we review are not optimized, usually around a couple major errors that I see. One is depreciation, right? So as real estate investors, if you're someone who already owns real estate, we can take a paper write off on the purchase price of the building over time. And 9 times out of 10, I typically see just the regular depreciation taken when in reality, there are so many different ways that you can look at depreciation for a property to optimize it. There are ways to accelerate it. And then I think just the ability to use rental tax benefits against W-2 and business income. That's where an opportunity area we see missed quite a bit. So depreciation is super amazing because it is one of those things where if you made a mistake, you can go back and fix it and catch up for what you didn't do in the past. And I think the other big mistake we see is just, not being strategic about what are the different ways I can actually use my rental tax benefits to offset different income sources I have from my job or from my business.
Yeah, no, that's huge, huge. It's huge. You touched on so many good points. Another strategy that is so overlooked that you love to talk about as well, and it's actually going to be a focus for my clients in my mastermind just because of where they are, is the short-term rental loophole. So what is the short-term rental loophole? Who is it for? Why is it called loophole? Please break it all down.
Yeah, of course. Yes, short-term rental loophole is one of my absolute favorite tax loopholes when it comes to real estate because it can work for virtually anyone. And what that does is the short-term rental loophole basically says you could be someone who either has a day job or runs a business, and you can continue doing that. Okay, we don't have to change what you do on a day-to-day basis. You can invest in short-term rental properties as a side hustle and potentially be able to use those rental tax benefits to offset not just rental income, but all of your income. And if you're married, you have a spouse, it can also offset income from your spouse as well. So that's what I love about it. It works for anyone, doctors, other accountants. We have clients who are other accountants who utilize it. Just somebody high W-2 working in tech, all kinds of people can utilize it. So I think that's, one of the reasons we call it a loophole is with respect to regular tax law, there's always more stringent upon who can use it, only for high income earners, only for low income earners. If we're talking long term rental properties, it's only for people who are real estate professionals. And the short term rental loophole is just much more achievable for virtually anyone.
I love that. So what, like, you don't have to break down all the details, but how does a person qualify for short-term rental loophole? Like, what are the, like, main
Yeah.
requirements?
Sure. So a couple of things, right? First, we want to define what is a short-term rental property because there's a lot of areas of confusion on that. So, a short-term rental property for tax purposes is any property where the average guest stay is 7 days or less. So, just because you list something on Airbnb does not mean automatically it's a short-term rental. But the good news is, as a property owner, you can control, right? How many guests, how many days minimum they rent from you, so you can control that for the most part to make sure a specific property is a short-term rental. We also have clients who own long-term and midterms that strategically turn the properties into short-term rental in a specific year just to be able to use the tax benefits. The other definition really important to understand is in order to use the loophole, you have to meet what we call material participation hour requirements. And that there's a couple ways to meet it. The most common one we see is 500 hours. So meaning you and if you're married, a spouse, okay, combined, if you can earn at least 500 hours with respect to managing your short-term rental property, then you can use short-term rental losses against all types of income.
That's huge.
Yeah, and when it comes to hours, there's, a bunch of different things that qualify. I mean, getting your short-term rental ready, handling guest communications, scheduling out your cleaning crew, or maybe if it's local, you can clean it yourself. Those are all hours that allow you to meet material participation. For those people who buy properties later in the year, let's say third quarter, fourth quarter, where you just don't have 500 hours, a couple other ways to meet it is if you have 100 hours and nobody else has more time than you, then you're able to use the loophole as well. So, like, if you bought something in November, you have 110 hours and the cleaning crew only had 20, the landscapers only had 10, you could still use that loophole and offset your W 2 or business income as well.
Which is huge, which is huge. I remember
Huge.
working with I had a client I worked with last year, she's a doctor, and, most doctors she made a lot of money, and because of the type of rental strategy she was using, which was just long term, she found it hard to benefit her to continue to, invest in real estate in that particular way, and so I found that sometimes people get afraid when you hear short-term rental or Airbnb and they get stuck on, the systems operations part of it and feeling afraid of how to manage that and not really recognizing the benefits of it from a tax standpoint. How do you help clients overcome that?
It's so interesting, right? Because that's also something I hear a lot is I don't want to have a second job, right? Especially like I'm a doctor, I have kids, I'm very busy. I don't want to get another job of being a short-term rental operator. And, it's exactly like you said, it's about systems and processes, right? When you have those in place, you can get a lot of that done without it becoming a full-time job. And also just the amazing things that we've seen with technology and
Yes.
enhancements in AI, right? A lot of our clients use Hospitable, which is like
Yep.
one
I
of
use
the apps for
Hospitable.
STRs. Yeah, and because the bookings and stuff are on there, they know when the guest checks out, they can ping your cleaning crew. So much of that is automated, it's automatic responses where you just have to maybe review and press send.
Mhm.
And so it's little things you do. And then also too, just for a lot of our clients, it's important for people to understand that when we talk about the strategies, short-term rental loophole, for example, if you're
Mhm.
trying to meet the 500 hours requirement, we only care about that in the year that you're trying to use the tax strategy. And so if I've already extracted all of my benefits in this year of investing, next year I can have a property manager manage it. I don't have to always and forever have all those hours, right? And that's what I love about tax law is once you understand it, it's super flexible and you
Yeah.
just have to be intentional about how and where you're spending your time, what kind of properties you're buying. But it's definitely, those could be game changers
Yeah.
when it comes to, how much taxes do I actually save?
Yes, because people don't realize we think that our housing is our biggest expense, but really our taxes are our biggest expense. And people come to me and they want to have more money in their bank accounts and they don't want to have to spend all of their money buying property. And I'm like, the money is in your taxes. Let me help you. Let me help you. And they don't
Yeah.
realize that, some investors were using this tax strategy or various tax strategies to actually help fund future investments.
Yeah, for sure. We have, I know you mentioned earlier to share a client example. So
Yes.
we have a client example. It's actually two physicians married to each other. Their income is over $600,000. Very significant amount of income. I mean, normally their taxes would be, but probably at least half of that, right, with respect
Mm.
to federal and state taxes.
Yep.
And so for them, it was going from just W-2 income where there was virtually no write-offs besides 401k contributions at work. They bought two short-term rentals, a single family, nothing super crazy. I think it's about four or $500,000 each. And in that first year alone, their paper write-off just on building and furnishing and all that was close to $300,000. And that's just two small STRs. And so you can see how that's such a drastic change.
Yeah.
Instead of paying taxes on 600,000, they're paying taxes on 300,000. That saved them over $100,000 in taxes. And that's where you were saying, well, now that I have $100,000, that could be a down payment on my next property for four or $500,000. And you kind of just rinse and repeat.
Yeah. No, that's huge. But do you have like a situation where like I have this a lot with clients where maybe someone is an attorney or lawyer, they're making, between 150 to 200, maybe they're single, they don't have a spouse that can that's not working, that can kind of claim real estate professional or whatever, and they just feel like I like can the short-term rental loophole work for them?
Yeah, for sure. A lot of our clients, so again, a short term rental works for virtually anyone. Anybody. You could be married, single, young, old, no experience, doesn't matter, right? But with long-term rentals, it's a little bit more difficult because if you are married, you or your spouse has to be a real estate professional, similar set of rules as the STRs we talked about, but you also have to spend more time in real estate than your job. And that's where a lot of, so it's like, man, do I quit my job and do this or do I keep my job? And that's why we love about the short-term rental is you could be a single person working full time and you have a short-term rental on the side, as long as you meet those material participation hours, you can use rental losses to offset all types of income. We have clients who do crypto and they're like, oh, can I use that for crypto? You can offset with all types of income.
Yes, I love that. That's really great. Okay, so that's huge. I don't want you guys to like rush past that. That alone, that advice can save you thousands and thousands and thousands of dollars. And
Yeah.
again, don't get hung up on short-term rental strategies and feeling like it's not going to be successful. That's why you invest in, a coach like me or join a community and surround yourself with other investors who are doing it as well as also working full-time jobs and things like that to help you automate and figure out how to do it easier. I mean, it's huge. We use, there's even Turnover BNB, which is an app that helps you find cleaners. There's so much automation and tools that are out there that can help the process be so much easier.
Well, it's really interesting too. I was saying earlier, you don't have to self manage forever, right? You don't have to earn the hours every year. We've seen a ton of success with our clients. And this is also one that we were working with strategically. So when she came to us, she wanted to do midterm rentals. It's kind of like midterm rentals. I know people who've done it, and that's what I want to do because it's higher cash flow than long term rentals, but more hands off than short term. But this client was someone who's a single lady working full time. So it's like, well, you're not going to be a real estate professional unless you decide to marry someone who maybe doesn't have a job and you convince them to do real estate, right? Which is not what you're trying to do. So for her, what we talked about was let's find a property that could operate as short term and midterm successfully. So maybe in the first year, we do it as a short term rental, 7 days or less of average guest turns, get all the benefits. And the following year, you can do it as a midterm or go back and forth as you wish to get the highest cash flow.
Yeah, that's really good. I preach, having multiple exit strategies because I've had properties that I've done 3 different strategies for various reasons,
Yeah.
because
Yeah.
maybe I just don't wanna do that now, or maybe it's a tax strategy play. So I love
Yeah.
that so much. Okay. So before we close, we're gonna have a quick rapid fire truth or lie. Okay?
Okay.
Round, all right?
Okay.
You down? You
All right.
game? All right.
I
So
am. I am. Truth or lie about me or about taxes?
about taxes, just a couple quick questions. A couple quick questions. Depreciation only helps on paper. Is that true?
Not necessarily. It helps you in cash through tax savings.
Okay. Okay. All right. So kind of true. Kind of, yeah. All right. So this is a good one. Cash flow is the only amount of money that you make every month after you receive your rental income and pay your monthly expenses.
No, not at all. Tax savings, appreciation, debt pay down, all of the things.
All of that should be considered. So it's not just so if you break even monthly, but you benefit in these other ways, it could still potentially be a good deal. Love it. I love it. Is there anything else that you want to share that people just miss when it comes to tax planning or, utilizing real estate to save money in taxes?
No, I just encourage everyone to take the time to do it for yourself. It is like anything, right? It might seem daunting at first, but once you understand how it works, you turn into Erica, who's like, I love it, fell in love. And it becomes a tool, rather than like a liability that you run from, it becomes a tool. It becomes fun for you to understand how it could be levers to help you. And I think a lot of people wonder, like, well, how much money should I be making before I consider tax planning? And it's really not about how much income, it's really about what you plan to do with the income you made. And that's why we started earlier with, hey, if you have an investor mindset, we're talking real estate here, but it could be any kind of investment. I want to grow wealth, I want to invest and grow wealth, then tax planning is absolutely something to worthwhile, right, to look into. Because the
No,
government incentivizes you to do those things.
it really does. And I actually began tax planning before I became a real estate investor, and it served me since. And I've never, ever paid a lot in taxes. Never. I just haven't because I'm always tax planning. It's a huge, huge deal. Well, this has been such a great episode. Okay, so I know for my clients, for my mastermind clients, you have something special for us to
I
use.
do.
What
I
is it?
do. I just finished putting out a brand new 2026 tax savings blueprint. It's called Real Estate Tax Savings Blueprint. And it's basically, I share what are all the different steps and strategies that we work with our clients on in terms of tax saving. So we go over legal entity structuring. How do you know if you can write something off? A short-term rental loophole, like what qualifies, what doesn't qualify, real estate professional, retirement investing, and all the different strategies that are available. So yeah, super
That's
excited for
huge.
everyone to see
Thank
it.
you. And that's this just one of the many benefits of being a part of my owning and living community and specifically my mastermind. You don't just get me, you get so many other experts that are here that are sharing resources that you're constantly able to plug into. So I thank you so much for that. I appreciate that. And so where can people follow you? Because you need to follow Amanda. First of all, her content is so much fun. And again, she's sharing information on taxes and seeing any changes that's happening. You're like on the forefront. So where can people follow you from here? You really are. I really appreciate
Yes.
it.
It's funny, I do have people who say, "I get my news from you." And I was
Yeah.
like, "No, I only give tax news. I don't give, like, world news." But, yeah, the best place to find me, so I'm always on Instagram if you're looking for bite-sized tax and financial tips. Instagram as Amanda Han CPA. If you're, looking for additional, more deeper tax strategies, I also have a YouTube channel, also Amanda Han CPA. And if you're looking for help with tax planning, my firm is called Keystone CPA, so you can go to keystonecpa.com.
All right. Well, thank you so much for being a part of this episode. And thank you so much for listening or watching. I will see you next time. Bye.